Hello everyone, welcome to the next part of this course. I'm going to teach you the true way to draw support and resistance. A lot of you that's got some previous knowledge trading will understand that many people draw support and resistance in many different ways. Okay, so the first thing I'm going to show you is a lot of people will tell you that you draw support and resistance on 3 to 4 touches of a wick. Okay? That's not actually correct. The reason because I believe that's not correct, and many traders that we have taught and many mentors that we have discussed this exact thing with will explain to you that every single candle has 3 to 4 touches in a market, and I will show you exactly why. We all know that a candle is built up of 4 parts. We have an open, a high, a low, and the close could be here. So we just put a close in. So I'm just going to quickly show you. We've got a high, a low, an open, and a close. If some of you new traders are thinking that looks nothing like my candle, it's because you're probably using Japanese candlesticks is what these are. So all that is literally open and the close price filled with a little box. Okay. So now we've got a high point, you can see that there's a wick being formed. So there's a rejection from the top that has been pushed down. And exactly the same from the bottom, support has rejected and pushed the price back up. And then we've got the open and closed price container. Yeah, so this is 4 parts to a candle. So I just want you to always remember that because it's 4 parts in a candle, right, these are intercandle support and resistance. Okay, so you've got the low, the open, the close, and the high. So we need to break an individual candle down to 4 sections. This is why a lot of traders always trade the second half of a candle, and we're going to cover more of that in the price action section. But for now, this is just a quick glimpse at why 3 to 4 touches on a candle's wick or body is not really technically support and resistance. So what I'm going to do, I'm just going to randomly pick a few lines. So one there, wick there, wick at the top, wick at the bottom. I'm just going to get rid of these green lines because they're going to confuse the matter. And then what we're going to do is literally look back and see how many touches we've got. So we've got 1 touch, 2 touches, 3 touches, 4. This one, 1 touch, 2 touch, 3, 4, 5. Here, 1. We go right back in time. This is a really low point. 2. Does that actually any lower than that? So you can see that every single line that we draw on this screen has got technically a support and resistance. So a lot of new traders' charts end up looking a bit like this. And you've got no way of physically trading it. So what we're going to do, I'm going to show you the correct way to draw support and resistance. I'm going to be using an 8-hour time frame. I find this the benchmark for all my day and intraday trading. So if this was like a seesaw, okay, what I tend to use is my 8-hour as the midway point for my support and resistance. Then I'd have a 4-hour and a 1-hour. And then that would lead me into dailies and weeklies. It's really, sorry, I spelled that wrong. So it's really, really important to have the midway point, because the 1 hour will change the 4-hour direction, the 4-hour will change the 8 will change the day, and the day will change the weekly, and vice versa. So what we need to do is get the ideal midway point where we're not being moved by the weekly and daily time frames, and we're not being moved by anything lower. So this is why I'm going to be drawing my support and resistance on the 8-hour time frame. So the first thing we do to draw support and resistance is literally look for a point where the physical price is actually turning. So the market's gone up. We could say that the price there has turned the market. Same here, price has gone up. And we could say that this price here has physically turned to the market. So even though there's exhaustion and there's candles above this line, this is the physical price which has turned the market. And it is actually believed the psychological level of 127,000. They're not always going to be on psychological levels, but the big round numbers are really, really good points to take trades off of, and I will explain why as well in our future lectures. Right, so the first thing I'm going to do, I'm just going to identify this area with just a line. I'm just going to snap a line on the chart, and I'm going to paint to make sure it's a solid line because this is my midpoint of my trade. So I'm just going to scroll back, just see if we've got some little bit of support, resistance. Yeah, so it's not, don't look a bad line. Just going to zoom out a little bit more. Now I want to try and find the bottom. Right, so I'm just going to snap another line. I'm just going to put it around here for now. Sorry guys. Now what I'm going to do is literally move my line to where I think it best fits. So I'm going to put it here. This is where it looks like it's physically price is turning. I'm not bothered about all these wicks. This is just all I'm looking for is where price is physically turning. And then we're looking for a midway point roughly. So where price is turning again. Is it a bit lower than that? Yeah, there. So you can see the price is physically turning. We're going to be altering these in a second. These are just provisional lines. And then we can see there, got price. It's been really supported. And then obviously the top there is looking very good for support. We've got a nice bit of resistance. So we've roughly just put a few lines on. Give or take, only roughly. In fact, I'm going to move that one up there so it's really seeing that support. So what these are my points where I'm going to be looking to draw my support and resistance. We've not looked at any wicks. We've not looked at any candles. All we physically looked at is where price is physically turning. Okay. So what we're going to do is we're now going to draw some lines. So what I'm going to do is roughly draw a range of about 15 pips either side of these lines. But before we do that, I just want to measure the distance between the two zones. So that's 144 pips, 141, 152, 138. So this one just needs to be moved up a little smidge. You're roughly going to find that these zones are always going to be within sort of 10 to 15 pips of each other because of price repaintment. That's another subject we are obviously going to cover as well, and why market cyclicity, markets repaint between pivot points and psychological levels. So there we are. So we're just roughly going to draw a zone about 15 pips. Either side. I'm actually going to make this a dashed line just so it makes it much easier to identify. No matter if it's half a pip out, it's because these are just physical zones. I just want everybody to remember at this point, when you're trading support and resistance, price is not perfect. It's people trading against people. So price is never ever going to be symmetrically perfect. So if it's 1 pip away or 2 pips away from a line, that's as good as a touch. I'm just quickly just putting these in, 15 pips. So this will create a 30 pip zone. You can take a bit of time doing this. Obviously, once you've drawn this thousands and thousands of times, it will become a lot easier. Slightly lower that one, so we'll just move that in. We're only with TradingView as well. A little tip if you're using the TradingView platform: never have a line and try and move it afterwards. What you would do is literally use your price ruler to draw your 15 pips, and you can see the little arrow on the price ruler stays static. Then once you click your line, it's still static. So then what you can do is then click your zone. Just make sure this feature here, make sure you've got the crosshair ticked as well, because it'll give you a really nice horizontal line in order to see where you're actually placing the lines. It makes life so much easier. So same again, price ruler. Oh, just move that back with the undo. Done the same thing again, so we're just gonna 15 pips. And then we're gonna do 15 pips again. Great. Now you've put on your first lines. I'm just going to delete this one here because I've just noticed an odd line there. So at this point of this lecture, you should have all your support and resistance zones drawn in. On the next lecture, we're just going to look at checking and making sure that these are actually tweaked to find out where exact the best levels are. See you in the next lecture.